Hi, this is Brad Rosley. How are you again today? Nice to talk to you. Today's topic is going to be one that's very exciting. Not. Today's topic is going to be about how to save money on your insurance premiums. This is part of a series and a playlist on my book, Beyond Money. I wrote Beyond Money to help everybody make solid financial decisions. I'm a certified financial planner. And as part of my life mission, I want to teach people the same financial strategies that I've been teaching my clients for many, many years. I've been a CFP now for 30 years, practicing in my own practice for 25 years. So today, I know it's not the most exciting topic in the world, insurance, but it's one where I believe I can help you save money as much as several $100s a month if you listen to what I have to say. We're going to talk about three main areas today: auto, homeowners, and the biggest savings I'm going to save for the end is on your medical insurance. So let's jump right in for a second. This was the book, by the way, Beyond Money. It's available on Amazon. It was a #1 bestseller. I'm really excited about that too. So today we're going to talk about insurance and how to save premiums on them. First thing you got to understand though is, what is insurance? Insurance is a transfer of risk. Everything should not be insured. Certain things should be insured. Those that would potentially wipe you out. Insurance is there to protect you against financial disaster. There's a three-pronged test to know if I should be insuring something or not. Number one, the replacement cost is large. Insure for things that have a large replacement cost. If you happen to get an accident and total your car, or if your house were to burn down from fire, those are large, extremely large expenses. Second part, unexpected loss. Unexpected loss. You don't expect your house to burn down. You don't expect to total your car. You insure for those things. Okay? So we have large expense, unexpected expense. The third one is unpredictable. An unpredictable expense. Insurance companies are not going to want to insure you for something that's likely to happen. For example, if you live in a floodplain, it's tough to get insurance to cover your basement from flooding. If you are a horrible driver, if you are offered auto insurance, you have to pay at a much higher price because it's not that unpredictable now to say that you're going to get in an accident because your driving record is terrible. So now that we know that insurance is for large, unpredictable, unexpected expenses, we also should know what we should not be insuring. We should not be insuring little expenses that are expected. I'm going to talk about some of those right now. For example, let's talk about auto insurance first. Raise your hand if you have a low automobile insurance deductible. When I say low, $500 or $250. That to me is very low. You may say, well, geez, I have to keep a low deductible because I don't have any money saved up to pay for any kind of expenses. So I better keep my deductible low. That's the thought process that some people use. The problem with that is when you do need the insurance, let's say, for example, you are in a grocery store parking lot and you're backing out and you're going slow, but whoops, you didn't see somebody coming and you have a little fender bender. This is the most likely thing to happen in a car as far as an accident, something like that. Well, you get the estimate and it's $600. If you have a $500 deductible on your auto insurance and your damage report shows $600 on the person's car you hit in your car, are you going to make that claim? I don't think so. You're not going to make a claim on $600 when the first $500 applies to your deductible. And you know why you don't make that claim? Because you're smart enough to know that when you do make a claim on your auto insurance, your premium does what? It goes up. Say, I'm not going to make that claim, I'm going to pay out of pocket. Well, at what point or how much damage would you have to inflict, at what cost point, that you'd actually make the claim? Well, if you had a $500 deductible, you might not make that claim even if it's $800 or $900 claim. Now maybe if you had a $250 deductible, you might make the claim, but probably not till $800 or $900, depends on the situation, I guess. Because you know that every year, from many years going forward, your insurance premiums are going to go up a ton. That's going to offset the claim amount that the insurance company is giving you. My point is, you want to self-insure. By that I mean take a higher deductible on your auto insurance. It saves premium money every year. As a matter of fact, I saw one study that said that when you go from a $250 deductible on your car insurance to $500, you save roughly 7% a year on your premiums. When you take the jump from $500 on your deductible to $1,000, you save another 9%. So if you go from $250 to $1,000, you add that up, you're saving 16% a year. Well, if your auto insurance premium is $1,000 a year, you're saving 16%. You save $160 a year. Then every year you don't use it, you're that much farther ahead. And ideally, what you'll do with that savings is you'll put it away in a rainy day or an emergency fund for if and when you ever do need it to pay that deductible. The second thing I want to talk about today is your home insurance. Same concept applies. You don't expect your house to burn down. You don't expect you to have a huge claim on your homeowner's insurance ever. And most people never do. The purpose of insurance is you pay a little bit of money every year, and everybody in your town does. And when one person in the town or two people have a big claim, well, they have enough insurance in the premiums at the insurance company to pay those claims. I recently did a review of my homeowner's insurance, and I changed my deductible from $1,000 per claim to $2,500 per claim. That saved me $375 a year in premium. Multiply that times 10 years, because maybe I'll have a claim every 10 years, and that's saving $3,700 over those 10 years. That's a lot of money, especially when now my deductible is only $2,500. Even if I did have a claim, I'd still come out ahead. Another thing you should be doing is shopping insurance companies. On both auto and homeowners, I've probably shopped mine twice in the last 4 years, and I've saved, I think I saved $600 a year on my auto insurance, and I saved another $400 a year on my homeowners insurance, just from shopping around a little bit. I'd been with the same company for over 25 years and didn't realize how much I was overpaying for that type of insurance. So make sure you do that as well. How many of you have done that recently? How many of you shopped your insurance? Again, I'm just trying to save you everybody money. If I can help save you money, you're going to come out ahead, not the insurance companies. The third and final thing I want to talk about is a little bit more complicated, but potentially huge savings for people out there that are paying for their medical insurance. Now, a lot of us have employer-provided medical insurance. What we pay is dependent on how much the employer is helping pick up the tab. Some pick up all of it. It's extremely beneficial to their employees. If that's your case, make sure you thank your employer, because medical insurance right now is extremely expensive. Most of us are paying a portion of our insurance. A lot of our employers are offering multiple plans for the employee to choose, and the employee has a difference in how much premium they have to pay. I'm self-employed, so I have to pay all the premium myself. When you're self-employed or paying your own premium, you're really aware of how much health insurance costs. Now think about health insurance for a minute. Does your health insurance plan fall under this? Are you only insuring for large, unexpected, unpredictable costs? I'm finding most people, when it comes to medical insurance, are not following that rule, and that's the main reason they're paying so much in health insurance. Is an annual checkup, does that fall under this? Is it large? No, not really. Is it unexpected? No. Is it unpredictable? No. Don't insure it. Pay it out of pocket. Every now and then, you're going to get a bad cold or something, or your child's going to get strep throat, and you're going to have to see a doctor, and you're going to have to pay something out of pocket. I suggest that you up your deductible significantly and look at what the premium savings might be. Now, I know insurance varies a ton, state to state, whether you're single, married, or have a family. I get that. That's why I have to do this analysis. But in many cases, there are people walking around with $500 deductibles or $1,000 deductibles, and they could be increasing it to $5,000, which I know sounds like a lot of money, and I'm going to explain how this works in a minute. $5,000 deductibles, and they could be saving a ton of money every year. Let me show you how that works. Let's say, this is if you're a self-payer, I'll use those numbers. Well, let's say you have a $1,000 deductible and your monthly premium let's keep it simple, is $1,000. No, it's probably $1,500 if it's a family. I know it's expensive. It's what it is today for a lot of families. And let's say you go to $5,000 deductible. Your premium might drop by as much as $500. So you went from a $1,000 deductible to a $5,000 deductible, but your premium went down from $1,500 to $1,000. But you say, I can't afford a $5,000 deductible. That's crazy. That's a lot of money. I don't have that sitting around. Well, here's what you need to do. As with all these insurances, when you increase your deductible, you need to bank the premium savings for a rainy day when you may need it to pay for one of these different deductibles. So in this case, you take the $500 savings per month and you bank it. You saved $500 a month times 12 months or $6,000. Well, wait a minute. Your deductible, in the worst case, should you hit, it's only $5,000. You just saved $6,000. If you actually took that premium savings and put it away somewhere, ideally, if it's possible, I'd use a health savings account, and then before you get a tax deduction for that money, that's for another video that I've already produced on health savings accounts. But the point is to save this premium savings. Now, with these high deductible health plans, when you go to this $5,000 plan and you have a checkup, well, you might have to pay for that out of pocket. So maybe, hopefully it's part of the PPO network. So you just spend $150 for your checkup. Times 3 people in your family, you just spent $450 of your $6,000 savings. Oh, you're on prescriptions too? And that costs you how much? $1,000 a year? Okay, let's take the $1,000 in prescriptions too. So now you're at $1,400 that you took out of the plan. So instead of saving $6,000, you had $1,450 in expenses. So now you only save $4,500 roughly. That's money in your pocket. You see, when you pay the insurance company the premium, the $1,500 in this example a year, and you don't use it because nobody got really sick or didn't get in an accident or had a broken arm, the insurance company keeps that money. Most people don't have big claims every year. I know some people do. But even when you do have big claims every year, after that $5,000 deductible, you should set your plan up so that 100% of your expenses are covered. So if something terrible happened and you got a bad illness, you know you're only out of pocket the deductible amount, in this case $5,000. And the premium savings were still paying for that. So today the theme is this: raise your deductibles, bank the savings, raise the deductible and bank the savings. Keep more of the money that you used to pay the insurance companies, and therefore you will have more money in your savings accounts. It will also give you peace of mind. So make sure you have a good rainy day or emergency fund in case you do have to pay these premiums. I hope you subscribe to my channel, and this is part of a playlist called Beyond Money, which is the name of my book that I'm hoping that some of you will take a look at. You can download it on Amazon now for $5. But I hope you'll give me your comments. I'm very good about replying to them, and subscribe to the channel. Thanks so much for listening. Have a wonderful day.